understand what's going on here.
All right, everyone, I've got 10 a.m. on my clock, so let's go ahead and get started. This is, wow, I can't believe it's already Monday, September 14th. We're already at almost the midpoint of September. That's kind of crazy. So again, today we are going to be getting into, we're still looking at the accounting equation, which I think I told you earlier on in the semester. The first 6 chapters, really, they all build, upon each other. But in chapter 3, what's going to happen today is we're going to continue the accounting equation, but we're going to add on some new rules by looking at what they call debit and credits, the debit and credit rules, which I'm going to go over thoroughly with you today. I'm going to show you what a T account is. But all the transactions that we've looked at so far will not change. Everything from chapter 2, where it says, for example, an owner invested money to start a business, or you bought equipment on account or whatever, all that's the same. It's just that we're going to add another layer of rules onto that. I did check in Connect this morning. I looked at the grade book because remember the chapter 2 assignments were due last night. So if you had any issues or something's going on with your individual work from that chapter 2 assignment, just send me an email and let me know. Because I think from last week, I think a few people had some questions on it. But other than that, the way I can help you best is you have to let me know. The one thing that I'm still getting used to, and I'm learning with this live virtual lecture format, that's different from an in-person is that it's often difficult for me to assess your facial recognition and sometimes just the body language for me to see if you're really getting it. So, if you don't ask questions, if you don't let me know if there's an issue, I'm going to keep going. But again, I'm trying to help, but that's one of the things that's kind of hard with the computer is I can't see what everybody, if your video is muted, I can't see you. I can see your name on there, but again, unless you're raising your hand or asking me to stop or slow down, whatever, I'm not going to really have any idea if you're getting it, of course, until I look at the assessment, when I look at your homework and your quiz recordings. So again, today, the goal is to get into these debit and credit rules. We're not, we're into chapter 3, but with chapter 2, we're still doing everything we did in chapter 2. So really, chapter 3 is going to be kind of like a review of chapter 2, just adding on the new rules of debits and credits. But before I start, did anybody have any questions or issues that they came up with from last week for chapter 2? And feel free to speak freely if there's anything. I know it's Monday, but if there's nothing, usually when I do my my screen share, I'll mute everybody just that way everybody can hear. But if there's no questions or anything before I begin.
This is Tiffany. Sometimes I have a little trouble with the wording of the problem, like fitting it in certain areas to the point where I have to keep working the problem, and it's a little bit agitating because everything is online instead of the sheet being in front of me, and I printed it out, but the graphic part never prints out for me. So it's hard for me to plug my numbers and then to keep going back, deleting it and adding different numbers, trying to rework the problem.
Are you talking about like the problem from Connect, the homework problem?
Yes.
So you print the homework problems in Connect just because you like it's easier for you to like write it down on paper, right?
Yeah. Mm-hmm.
Yeah. I mean that's that's a good point. I can tell you, for example, with the CPA exam, back in the day, it used to be a pencil and paper exam where you literally go in and you have a couple pencils and you literally, it's like a Scantron sheet where you darken in the ovals on the answers. And then when they changed to the computerized tests back in, I think it was 2007, everything was done on the computer, but they still let you use scrap paper. But yeah, with that, Tiffany, I would just say, just take some notes. I think it's a good idea to maybe print out as much as you can, write it down, and then maybe use that as kind of like your study papers.
Yeah, that's what I've been doing.
Yeah, it's just, to me, it's just a learning process. I don't know how else to fix that other than, from time to time, I do try to have some in-class handouts that I give you guys in a Word document, and those are probably easier for you guys to print out. But early on, most of the stuff we're doing right now, it's all accounting equation right now. Well, and of course today I'm going to give you some stuff when we get into the T accounts and the debit and credit rules. But yeah, I just think it's something you just kind of have to get used to. Yeah, it's just, I wish we were meeting in person. It's much easier. But yeah, I just, do your best. I think what happens is it's kind of like a learning curve for everybody. Everybody kind of learns what works for themselves, and it's not maybe ideal, but it's definitely better than just watching a video and not having the ability to ask the questions, the live questions with the instructor. But yeah, just, and if there's anything else, like I said, if you guys get stuck on stuff and if my videos don't help that I have in Blackboard, and remember I'm recording this session, if this doesn't help, you can always schedule a meeting with me. And I believe, because our department is now a district-wide department, that means all the campuses, we all report to the same person. I believe that there is online tutoring available for accounting as well. So if you're wanting to get involved in some of that and get some help with some of the tutors, just send me an email and I can send you that link. I think they do it through Blackboard Collaborate. But if anybody's interested or needs help, just let me know and I can get that link up for anybody who needs it. So.
Okay, thanks.
All right. Anything else with anybody before I get started? It's 10:06, but anything else? Any other issues anybody's coming up with? And again, when you guys let me know stuff, it also tries to help me do something different. Even online when I'm with you, I can try to change a few things. I've got some things today. If we get into, we'll see how far we get with today. But I'm going to try to do a whiteboard, or I'm going to share a whiteboard where I'm going to do some annotating with you. But is there anything else? Issues, format? All right. Well, if there's nothing, I'm going to go ahead and share my screen and just, oh, I'm sorry, there's somebody that have a question. Yeah, for anybody that had access code issues, and I think sometimes, the code has just expired for a lot of people if they got in on a certain day. Could you just send me an email and remind me, and I'll be happy to extend any due dates if you had an issue and you couldn't get in. I think I literally had a couple people yesterday that their code expired, or it was like Saturday, and they hadn't done the assignments yet. I don't know if it was this class or I had another class that they had that issue, but if you just, if anybody has any issues with that, with their code, just let me know, and I can always adjust the due dates for you on that one. I think I had a student I just did that, so let me just respond. All right, I got that taken. Right. So anything else? Looks like we're good. I'm going to now share my screen. I'm going to put up, this is the Chapter 3 PowerPoint. You should all see that up there right now. If not, let me know. But it says Chapter 3, Analyzing Business Transactions Using T Accounts. So I'll just try to keep repeating as much as I can. Guys, the transactions in Chapter 3 are literally exactly the same as Chapter 2. Nothing's changing. What is going to change, though, is we're going to add these rules of what it's called the T account, the debit credit rules. Now, to go back, we all know, hopefully at this point, that the accounting equation, of course, is your assets equals liabilities plus equity. That's not going to change. Assets, again, I kind of define it very loosely as kind of what you own. The liabilities is your debt. And then the equity is what's left over. They often say that's what your interest is. That's your kind of like your net interest in the business or your net worth. That's not going to change. But going forward, what's very important in accounting is, and I'm going to try to use my arrow here just so you emphasize this, but you've got to know different classifications of accounts. And I think you've been practicing that in Chapter 2. Like cash as an asset, accounts receivable, equipment, accounts, supply, stuff like that. You have to still be able to classify accounts. Very important in this chapter, because each of these account titles could have a slightly different rule when it comes to the debit and credit rule. So as long as you know what the asset accounts are, and you know the liability accounts and the equity accounts, it should help you remember and also apply the rules of debit and credit. All right, so next slide, and again, I'm gonna pause this in a moment, get into a whiteboard, and just kind of do some writing for you. But this is the concept of what they call a T account.
Maybe.
And if you can see this right here, where you've got your asset, here's your equation: assets equals liabilities plus equity. And hold on just a second, let me do something. I just muted everybody so that way nobody gets distracted. But so you'll notice that we've got this T, and then you've got what they call the left side of the account and the right side. There's a left side to this T account and there's a right side. And on this slide, they kind of give you the rules where they've got the assets, you've got a plus and a minus, and then you see liabilities, you got a minus and a plus. And then for equity, you got a minus and a plus. And notice again, left side, right side, of course, a plus means increase, decrease. And we're going to get back to this in a minute. So if I'm talking too fast and you're trying to write this down furiously, don't worry, we're going to go back over this. But this is the basic idea, is every T account has a left side and a right side. And you'll notice that the rules in terms of increase and decrease are different depending on the classification of an account. So for example, an asset is going to increase on this side, the left side, and it's going to decrease on the right side. So, and then of course, liabilities, you notice it's just the opposite. It increases on the right side and decreases on the left side. And then equity, it follows pretty much the same rules as your liabilities. So then what happens is when we mix in these rules of debits and credits, it looks something like this. And notice you've got a debit and a credit, debit, credit. And notice that the debit, it doesn't matter what account you're looking at, whether it's an asset, a liability, or an equity account, it doesn't matter. The debit is always on the left. The credit is always on the right. That doesn't matter. It doesn't matter what account you're looking at. That is kind of like a universal rule. But then when you start to apply the increase and decrease by looking at, does it debit increase or credit increase, look at the asset accounts. I always start with assets first of all, because of course asset says plus on the debit side and minus on the credit side. And you might be thinking, well, that's pretty easy to remember, and it really is. But then the problem that everybody runs into, not everybody, but a lot of people run into, is that when we start to focus on increase, decrease, debit, credit, Some of you already have some knowledge of debits and credits. You had a credit card, most likely. Some of you may have a debit card. Some of you, you have a bank account. And you've been taught over the years that if you put money into your bank account, typically they'll say your account has been credited. And they do that for everybody. But now we're talking about the accounting rules of debit and credit, not what maybe what your bank says. So, and the problem there is cash is an asset. And typically when you put cash into the bank or you deposit money, you're thinking increase, but your bank is going to say, oh, you've just been credited. Your account's just gone up. And it may seem a little bit opposite because the accounting rules say, if you have an asset like cash, I always say, how does cash increase? Well, since cash is an asset, cash will increase with a debit and not a credit. So just to kind of back up, I always try to say when you get into these rules and we start to learn these rules is to try to just erase everything you might think you know about debits and credits and try to start from scratch right now. And so having said that, I'm going to do something right now. I'm going to go to a whiteboard. And this is typically how I like to write this thing out. And it's very similar to what you just saw. So if you're taking notes, and you're going to write this down, I'm going to give you, and hopefully my stylus comes in okay today, I'm going to give you all the rules here again in the T account format. And I'm going to write it out like this. Hopefully this comes across okay. So we've got your assets. I'm just going to write out your accounting equation. Assets equals your liabilities plus your equity. So that's usually how I write it out. And then I'm going to go ahead and write the T account just like I would like in an in-person class. This is what I would do in class. I would write the T account just like this. And then I'd say, okay, so here's your accounting equation. And then I'm going to say, here's your debit on the left, credit is on the right. Again, debit is on the left, credit is on the right. And that's going to be the same for all accounts. Now, I'll give you this right now. Typically, there's an abbreviation in the accounting world for debit and credit. So if you ever see something in your book where they say DR or CR, that's the abbreviation. DR is the abbreviation for debit, and CR is the abbreviation for credit. And so typically you might say, that's kind of strange. Why, debit, maybe it'd make more sense for it to be DB and not DR. That's just how it is. And I think it comes down to the root nature of how they created the word debit. I think it's some sort of Latin, but either way, it doesn't really matter. So just remember, DR means debit, CR means credit, and that's the universal truth. Now, once I go over this, then I go back and say, okay, here's the rules of increase, decrease with your accounts. So I always say, okay, plus, minus. I do a plus again for the assets on the debit side and a minus on the credit. And then for the liabilities, I always say it's just the opposite on the right side of the equals. You got minus, plus. And then for equity, again, you've got minus, plus, just like that. So again, just to kind of pause right there, because there are a couple more rules I want to give you. This is probably about 90% of it right here. Assets equals liabilities plus equity. You've got the rules of debits and credits from a T account perspective by saying a debit is on the left, a credit is on the right. Once we classify our assets and we go through these transactions today, we won't just say increase or decrease, we'll say cash debit or cash credit, which by default will mean increase and decrease. So that's going to be the one layer we're going to add on to when we look at a couple transactions. And then look at the liabilities. We won't just say accounts payable increases, we'll say accounts payable is credited. Or whenever we pay our accounts, we won't say decrease accounts payable, we'll say debit accounts payable. It means the same thing, but that's why you have to know these rules. And then when we get to equity, of course, equity increases on a credit side. Just remember, there are 4 equity transactions. So what I want to do now is go through those 4 events. Remember, you've got revenues. So I'm going to write out revenue and draw a T account. I'm going to write out investment and draw a T account, because that's two of the four events right there, revenues and investments. And again, you've got debit, credit, right? And then the other two, remember, you've got expenses, and then there's my T account, and then you have withdrawals. That's the four, those are the four, what I call equity types of events. And then there's your debit and credit, and then there's your debit and credit. So within this framework, let me give you the last of the rules. Revenues, and remember with investments, we always like to use, remember it's the capital account. That's the account we always use. And for withdrawals, we're going to use an account called drawing in this chapter. They're going to be a few withdrawals. They're just going to be an account called drawing. So if you're wondering what that is, that's a withdrawal. So for revenues and let me give you the rules for revenues and investments. It goes minus, plus, and minus, plus. Okay, so revenues and investments increase with credits, which is like affecting the credit side of equity. Expenses and withdrawals go the other way. You go plus, minus, plus, minus. And that's where people get thrown off of it. They're like, what? Expenses increase with debits and withdrawals increase with debits. And the way the rule makers wrote this years ago, it's kind of like saying you're increasing the negative part of equity, okay? So by debiting an expense, yes, you're increasing that expense, but you're also in effect debiting equity, which is going to be reducing equity. And I think this goes back to the last couple of weeks, where when I talked about, I always put a minus in front of an expense on the accounting equation, just so you remember that, remember expenses reduce equity. So now we'll say when you debit an expense, that is increasing the expense, but it's also reducing equity. And I wanted to show you this on a whiteboard today, because this is typically what I would do in the class setting. And that way, this session's being recorded. You can go back and review this again. Guys, this is all of the rules for all the debits and credits for the entire semester. It doesn't matter what chapter we're in, we will always follow these rules. So throughout the semester, you may get some new accounts thrown at you that say, what is this new, what is an allowance account, whatever. Just as long as you can classify that particular account into these categories, these are all the rules of debits and credits. Now, what we also did in chapter 2 was we always said that the equation, the accounting equation, has to always balance, and that's true. So now, when we add the debit and credit rules, we'll add this to it. We will always say that after every transaction, our debits will always equal our credits. And that's it. So debits have to equal the credits. That's going to be the theme from now on. And so anytime we debit one account, doesn't matter if it's an asset account or a liability account or any of these others, if you debit one account, you have to credit something else to offset that every single time. So every single time, just remember, debits have to equal the credits, okay? Now, what we'll do in a moment here is I'm going to go through some transactions where we'll be classifying the accounts again, like we did before, whether it's cash or equipment or whatever. And then we'll be thinking, I'll kind of practice with you today. We'll say, is it increasing or decreasing? And then we'll say, should that be debit or credit? And it's all going to come down to these rules that I just wrote on this little whiteboard. So we'll do that in a minute. And then we're still, the financial statements are still the same. We're still doing income statement, equity statement, balance sheet. That's not going to change. And in a minute, I'm going to show you a couple things on these T accounts before I get to a problem. But we will also do what they call a trial balance. And what a trial balance does is a trial balance is just going to prove that these are equal. And that's very simple. You'll see that coming up. And then other than that, you've got to know the rules of debits and credits in a moment. Another concept that comes up, and I'm just going to give these right down this whiteboard. You might see something that says, what is a normal balance? I'll get to that in a minute. Normal balance. just write this down. Normal balance of any account is always said to be the increased side. Okay, so, and this you'll know what I mean in a moment when we get to some of these problems, but they'll say, what's the normal balance of cash, or what's the normal balance of supplies? If you go to the classification, say, well, what is it? If it's an asset, where's that plus? That plus is on the debit side. So when they come up and you're going to see this, a normal balance of any account, just look to see where that plus is. Wherever that increase is, that is always going to be what they call the normal balance. Okay? And then remember, this is just accounting language. This is some of the basic foundation rules you got to get down. The normal balance is always going to be the increase side. Well, to know the increase side, you have to know the rules of debits and credits. Okay? All right, now, having said that, I'm going to go back. All right, so I'm back to my PowerPoint. Put my mouse back on. Okay, so that's what this slide here, and you can go back and review these and play my other videos. But again, these are all the rules, again, that I just gave you. Okay, now when we go through some basic transactions, let's look at a couple basic ones right now. You've seen these before. So here's one, pretty much the start of every problem. They say the owner invested cash to begin the business. And if this was chapter 2, you'd say, okay, you've got an increase to an asset and an increase to capital, which is equity. So now you've noticed they've got these T accounts. There's your cash T account, and there's your capital T account. Notice they put $100,000 into the business. This is an investment. So we know cash is increasing, and this is the debit side. So notice they're debiting cash and they're crediting capital, and that's how you do it. So every time you have a cash increasing, you will be debiting it. You will not be crediting it. A lot of people get that mixed up when they start this because they're so used to cash being credited into their bank account. And they're also used to, for example, if you use a debit card, what happens when you use a debit card? You're kind of programmed to think that cash is decreasing, which by default in a bank it is when you're using a debit card. But this is the accounting rules. It's different. So cash, again, which is an asset, increases. So this is how you would show a debit to the T account. You put it on the left side. And then remember, your debits have to equal your credits. So notice they put the credit on the credit side of capital. So here's your debit of 100 and credit of 100. They offset each other, so you're good. And we'll do this individually for every single transaction. Notice we're not even writing out the accounting equation right now. We're just writing out the individual. We're identifying the accounts that are affected. And then we're asking ourselves, should we be debiting or crediting? And you got to be thinking, is it something increasing or decreasing? And once you get that down, then you kind of apply the rules of debits and credits. Okay, so I'll stop for a minute. Does anybody have any questions on anything that I just showed you? Again, I'm looking around. Again, it's hard. I think this is in class, it'd be easier, but you know, when I don't see any videos and I'm just guessing, that's why I say ask me a question or send me a chat if you're not understanding what I just said. Well, let me just practice a couple more because there's a couple more things on this slide that are pretty important that I want to go over. Abaka, did you have a question? Usually I can see if something's lighting up, like it looks like somebody might be trying to talk, but if not, I'll keep going. All right, check this one out. So here's another transaction. Notice it says Eli's Consulting Services issued a $5,000 check to purchase a computer and other equipment. So I'm saying, okay, check means cash, and computer and other equipment means equipment. So we know cash should be involved as well as equipment. So we know that these are two assets. We have one asset, which is cash, and another asset, which is equipment. So then you got to be asking yourself, okay, what's increasing, what's decreasing? Well, clearly cash is decreasing because you're paying money. So to decrease cash, you have to credit it. And of course, equipment should be increasing, so therefore you got to be debiting it. And I often tell you, when you first start this, if you can identify the accounts that are affected, and if you can at least get one of them correct, you know, by default, you have to get the other one, because if you debit equipment, you have to have a credit to equal that to go somewhere else. Okay. And then going back, and let me just kind of write this out on this one. So again, if we had the accounting equation written out, and if I wrote it out like this, if we had, let me get my stylus on here. I get, here's your assets equals liabilities plus equity. This is kind of like saying you're doing a plus 5,000 and a minus 5,000 just to the asset side. If it helps you to kind of go back and say, okay, how does this again fit in with the accounting equation? That's essentially what we're doing. But then logistically, for the accounting rules, we're also saying that we're debiting equipment by 5. Again, that's your debit. And then we're crediting cash for the same amount. So here's the T account, how would you analyze it? And then I'm just trying to show you also, this is how it would be fitting under that umbrella of the accounting equation. Okay, is that good? Any questions on that one, what I just showed you? Anybody? All right, good. Next one, notice same types of transactions. Notice you bought office equipment for $6,000 on account. We've seen that before. That's review. That's not new at this point. So we know we've got equipment and on account. And of course, the question I think last week was, should it be accounts receivable or should it be accounts payable? And remember, anytime you're buying something on account, it's going to be an outflow of money eventually. So it's got to be accounts payable, which is liability. So so you'd write the accounts out. You've got your T account set up like this, and then we know the amount is 6,000. So then you're saying, okay, equipment is an asset. That asset should be increasing. You're buying it. So that's why they debit it, because you increase assets with a debit. So once you debit equipment, if you stopped right there and you say, well, I've got to credit something else because the debits have to equal credits, by default, you have to credit accounts payable. You cannot have two debits here. If you did, you wouldn't balance, okay? So every time we do this, you notice you got debit equipment 6, that's an increase. And you've got a credit to accounts payable, which by the way also means increase because you're increasing your debt. And then I'll just make a little subtitle here, you know, at the end, let me get my stylus on here. Remember, just remind you that your debits always equal your credits every single time. And it might bring up something else. You know, if you think of technology and accounting systems, because, you know, all this is automated and it's all on the computer, you know, it's quite literally impossible for you to ever be unbalanced. You always will be imbalanced, you know, because a computer system will have some sort of default set up where you can't enter only debits. You got to enter something to offset it. So usually the issue that comes up later on, and this is where the thinking and the critical thinking comes in, is you could get your debits and credits correct, but from time to time, people make mistakes. You might be debiting or crediting an incorrect account. And then that could have financial statement implications. So that's where you have to understand all this in order to fix stuff, because it happens all the time. Okay. All right. Couple more. Again, I'm going to walk you through just a series, and all these transactions I'm showing you, you've got these on the PowerPoint. I've already illustrated them, but I just, for purposes of today, just to kind of show you these debit and credit rules, let me walk you through some more of these transactions because I want to show you what happens when we get to the account balance and the trial balance. So here's one, and let me erase my drawings. So here's one where you've got purchased supplies for cash. So right away, you just stop and think. Supplies is an asset, cash is an asset. One asset should be increasing, one asset should be decreasing. We know supplies is increasing, so that's why they debit supplies. We know cash should be decreasing, again, both assets, so that's why you have to credit cash. So here's your debit, and there's your credit, and then you equal. Okay, so again, this is the same stuff you got. This is at this point, hopefully you're getting into this, reading this stuff. It's coming easier for you. The only way it's going to get easier is with, of course, with practice. Here's one where they are paying a liability. You're paying your accounts payable. Notice they say issued a check. That's cash. You're paying money. So we know cash is going to be affected. And in this case, we're paying your debt, which is going to be accounts payable. So how do you decrease cash? Well, you decrease cash with a credit. And how do you decrease accounts payable? Go back to your rules I just gave you. You would be debiting accounts payable because that's a liability. That's how you decrease liabilities, is with a debit. Okay? So again, your debits equal your credits. You're crediting cash because you're paying money. You're debiting accounts payable because you're reducing your debt. Okay? And every way we go, we'll do these kind of one at a time like this, just to keep it simple. But just identify the accounts, think, is it asset, liability, or equity? And then think, is it increased or decreasing? And then just apply that rule that those rules I just gave you. That should be your process, at least this week when you're practicing this stuff. Okay. Last one they gave you looks like is a prepaid rent. And if you look at this transaction, again, it says issued check, which is cash, to pay the rent for December, January. So this is paying it in advance. So that's going to be what they call a prepayment. And then of course you've got cash, prepaid rent and cash. These are two assets, by the way. Anything that says prepaid means you have a benefit. Cash is going down, so we have to credit cash. The offset then has to be a debit to equal it. Debiting this prepaid, you're increasing it because now you have the ability to occupy the facility that you're renting. Okay. Now, once we do all these analysis, and we'll do a lot of this week, we're writing out our T accounts and we'll do our debits and credits. Once you've done that, then we'll get to this concept of what is an account balance. All right. And I'm going to skip down to a slide. I want to show you this. This is what they mean by an account balance. Now, what will eventually come is, in this slide, notice they just have cash as one T account. And that's typically how we'll do it eventually, is we'll set up one T account for cash, and then we'll just debit and credit it as much as we use it. Rather than setting up a new T account every time we do a transaction, we'll just have one summary T account for cash. So what they're showing you here is that, remember, here's your debit on the left, and there's your credit. They're saying, okay, you've got one debit here, and you got 1, 2, 3, 4 credits there. A balance means what you do is you add up the debits, which the debits here is 100,000, it's easy. And then you add up the credits, which they did that here. The credits there are 17,000. Once you get each total, then you take the difference. You got to subtract. Always subtract the smaller number from the larger number. And they're showing you that right there. So if you take 100,000, subtract out 17,000, your balance, you get 83,000, which, notice, it's on the debit side. This is called, again, a normal balance of an account. And that means the increase side. Well, cash is an asset. We know assets increase on the debit side. Notice the balance is also shown on the debit side. So one of the things you got to be able to do in this chapter, come up, is you'll record transactions in T accounts. You'll do your debits and credits. And then eventually they'll say, what's the balance of an account? What's the balance of each account? And you got to appropriately say, is it a debit balance or is it a credit balance? And this is how you do it. It's just adding and subtracting. You just got to make sure you put the balance on the correct side. So assets, any asset account should always have a debit balance. Get it? Any liability account should always have a credit balance because, again, it increases on the credit side. So on the next slide, let me show you this. They give you a summary of all these T accounts. Check this out. You've got, here's your cash. Notice you got 100,000 debit and all these credits. The balance is in bold. The balance is 83,000. They just showed you that. Look at accounts payable. You have 2,500 on the debit, 6,000 on the credit. They took the difference. You get 3,500. Notice that goes on the credit side because that's the increase side. Okay. Notice capital has the balance of 100,000 again on the credit side. You've got supplies debit, prepaid rent debit, and then on equipment, they've got 5,000 and 6,000. Add those together, you get 11,000. That's the balance. So at this point, I like this slide. They showed you how this would fit into the equation. Again, this is a review from chapter 2. They're showing you that your assets still equal your liabilities plus equity. So this is your equations in balance. This is showing you the individual account, what the balance is for each account, whether it's what they call a debit balance or a credit balance. And then eventually you could get into the concept of a trial balance. And eventually what we'll do, I'll show you what a trial balance looks like in a minute. The trial balance, all that will do is that'll just show you, it'll add up all the debits and all the credits, and it'll show you that your debits do equal your credits. So it's very similar to the equation, but it won't just say equals. It'll say you'll have a debit equals your credits. In fact, let me show you, because I know we got about 11 minutes, but let me show you what a trial balance looks like. I'm going to skip ahead to the part down here. Here's what a trial balance might look like. Again, because I'm not going to go through every single transaction on this PowerPoint, but notice trial balance, you've got a debit column and a credit column. You just list all of your accounts that you have in your business. You add up your debits, you add up your credits, and notice you've got a debit of 150,500 equals credits of 150,500. Now, again, this is after looking at more transactions. You have revenue transactions and expense transactions and so forth, buying more stuff. But just to show you what a trial balance looks like, you'll have to do one of these. I think you got to do one in your homework too when you get to it. It's not hard. You just have a debit and credit. You list your accounts, list the balance from your T account of each of them, and then you got your debits equal your credits. And just because they're equal doesn't mean there's mistakes. There could be, but that's not what this trial balance is to prove. All the trial balance proves is that your debits equal your credits. And then I just want to remind you one thing here. Notice your financial statements are the same. Income, equity, balance sheet. You're going to have to get used to revenue. They like to use this account called fees income. That's the revenue account they use throughout pretty much the entire textbook. So just kind of get used to seeing fees income as your revenue account. But once you get that, notice the sequence is the same sequence that I showed you last week that you did in chapter 2. You start with the income statement. Your net income gets transferred to equity. Your equity balance then gets transferred to the balance sheet. That's the order. That's why you go income statement number 1, equity statement number 2, balance sheet number 3. That's the order that you want to do it in. Okay. And I think, oh, and then one more thing. This may come up, and I'm just going to give you this ahead of time. They have what they call a chart of accounts. Every business has a list of accounts they're going to be using when they do these transactions. And these account names are universal, by the way, you know, cash, AR, and so forth. You may see these numbers that are associated with each of these account names. You don't have to really worry about memorizing any of those. This just represents kind of like the computers. It's the binary system. Whenever you're entering stuff into a computer, your computer reads information by looking at numbers, the binary code. So typically, if you, for example, see 101 reference, that means cash. The computer would know that 101 is cash. But the way we'll do it is we'll go ahead and just write out the names on the T accounts. But I'm just saying, if you come across these numbers, you're thinking, what does that mean? Typically, eventually, we get to the ledger. This is just for the computer to be able to understand what you're entering. Okay. And of course, these numbers can get kind of crazy too, because, you know, you got a company, you could have thousands of accounts that you're using. But just to keep it real simple, this is typically a setup in terms of how a computer system could work. All right. Question. Yeah, somebody said, yeah, this PowerPoint is, you should have that in Blackboard. If not, let me know. But you also have this video as well. So you got, I think you do have the PowerPoint, and you also have this video that I'm just showing you as well. You have, so it's kind of like in a way you're getting it 2 times. Okay, now let me show you something. So having said that, so I'm looking at my time. I only got about 7 minutes, and I knew I wanted to, I'm not rushing this. We're taking some time on chapter 3, so don't panic today. If you're thinking, oh my gosh, I'm not getting this. Seems so weird. Do not let that scare you. We're going to spend at least a couple weeks on this. I'm just trying to introduce it today. I'm trying to speak, very, slowly and closely, carefully enough so that you get this, and then you go back and replay this and start to practice this. But let me show you. I'm going to try to get a book problem pulled up. Let me get that up. All right. I've got, let me see. You should see right now, again, this is in your book. It says exercise 3.1. But what I really want to do before I do that, I actually want to do 3.2 with you. But let me do something real quick. I want to get up my screen. I'm going to try to split my screen so you can see these back to back. So let me do something real quick. Don't panic yet, because I'm going to change my screen share. All right. So this is what I got pulled up. And again, if you cannot see this, let me know. I'm looking to see if anybody's saying they can't, or anybody can unmute themselves at any time. But this is, you'll notice I've got 2 windows open here. I've got exercise 3.2, and you'll notice that I've got some T accounts already set up. So what I'm going to do here is I'm going to go through, let me delete that. Just a couple basic transactions here. I only got a couple minutes, but here's how this is going to work. So notice, again, in this problem, we've got 5 transactions, right? The T accounts are already set up, and you can go back and look at this later, but you got cash, supplies, equipment, capital, fees, income, and advertising expense. So let me just go through a couple of these, and then you can see how you would do it eventually. So look at the first one. You've got Hayden invested $90,000 cash in the business. So if you had to do a T account, notice we got cash, T account's already written, and of course it's going to be capital. We know this is an investment. So if you had to say, okay, well, how would you analyze that? Well, cash is increasing. So what would happen to cash? You'd say debit cash 90,000, and I'd enter it just like that. There's my debit. And then you got to be thinking, okay, so if I debited one account, I've got to credit something else to offset that. Well, of course, obviously the credit would have to go to capital. But, at the same time, you are increasing capital because this is an investment. And that's how you do it. You simply say debit cash and credit capital, okay? Are there any questions at that point on anything I just showed you on this transaction? I'm just trying to get something in for you today so you can see one from your book. Is it helpful? Is it not helpful? Is this stuff seem easy? Ubaka, what do you think? Good?
Could we do another one?
Yeah. I'm doing, like I said, now I got about 4 minutes. So usually this is like the first one you'll see in just about every problem. So here's number 2. It says paid $30,000 in cash for equipment. So we know it's going to be cash, right? And equipment. So you'd have of course, I got the T account set up. There's your equipment T account. And once you identify the accounts that you're classifying, then go to the next step is, okay, are you increased or decreasing? So with cash, you should be saying decrease. And if you decrease cash, at this point, because it's an asset, we will say you're going to credit cash. So you put 30,000 on the credit side, and then you have to debit something to offset that, and that debit would then go to equipment. So here's your credit to cash, and there's your debit to equipment. You're decreasing cash, which is a credit, and you're increasing equipment, by debiting it. That's applying the rules of debits and credits. Question. I mean, it's a language. It's going to take some practice. I don't expect you all to get it the very first time. All right. And that's why, like I said, read this, review this thing that we're doing today. Go back and watch my PowerPoint again in chapter 3. And then the way you're really going to get this is by just practicing. All right. You're not going to get it by just watching. I always say accounting is a participation type of activity where, if you don't actually do it, write it out, type it in, you're not going to get it by just watching. It just takes a while, takes some practice. Okay. I think somebody had a message yet. People get confused initially with cash because you think cash should be credited. Anytime cash goes up, your default to think is it should be credited, but that's not right because it's an asset. So you just got to follow that category of the debit and credit rules with your assets and think increase or decrease. Assets always increase with debits and decrease with credits. Look at number 3. Let me get a couple more. Number 3 says perform services for cash, $9,000. Well, you've seen perform services already. We know that's revenue, and we know cash is cash. So you'd say, okay, first of all, should cash be increasing or decreasing? And last week you'd all say, well, cash should be increasing. And under the rules of debits and credits, you'd say I would be debiting cash for $9,000. And if I debit cash for $9,000, I have to credit something. So fees income, which is my revenue, would be credited for $9,000. That's how that works. Okay. So there's your debit to cash, credit to fees income. You're increasing cash with the debit and increasing your revenue, which is fees income, with the credit. So there's your debits equal your credit. All right. And then 2 more, you got the number 4. It says you paid cash for advertising expense. Think cash is an asset. It's decreasing. So you got credit cash, 3,800. Notice, just put 30. I shouldn't have done that. If you put a minus in there, for me, it's not going to be a problem. I think if you try to do that in your Connect homework, they may mark that wrong because just by putting that credit in there, by default, you know that it's decreasing. And then of course, advertising, which is an expense, you're increasing it. So you got to debit it by 3,800. So here's your debit of 3,800, and there's your credit of 3,800. Okay. So I'll stop on that one, but I just wanted to show you a couple transactions today. I know it's a quick, 50 minutes is a quick pace, but what I intend to do with you on Wednesday is we'll pick a couple problems, and I'm going to try to get some more feedback from you as I go through them. Just be prepared to go over some of the end of the text problems from chapter 3. And what we're practicing the next couple of weeks is we're practicing these debit and credit rules. So don't panic at all if you're already thinking, man, this is weird. Guys, this is just the accounting language. Okay. So I know some of you might have an 11 o'clock, so I want to respect that time. So if you need to leave, that's fine. And then you can go back and play this recording later. I'll have this up on Blackboard today. But does anybody have any questions on anything I just put up on this problem or on debits and credits in general? Anything? I can hang on for a few minutes if you need me to. It's kind of a quiet group today, but that's fine. All right. Well, I don't have, if there's no questions, I'm not going to just hang on here if you got stuff to do. But again, just to continue this on Wednesday, you might want to go back and watch my PowerPoint lecture video. You'll be able to play this video once it's live on Blackboard. And I would say even start practicing your homework in Connect. You can get in there and start submitting those. Remember, you got unlimited attempts on those homeworks. And then what'll help me even on Wednesday is if you try to practice, go back and read some of the stuff and practice it. And then that way, if I'm in the middle of a problem or something comes up, you're able to ask me a question, say, I don't get this. It's easier for me to kind of help you if you come to class prepared with that. So yeah, so it's almost like try it and fail with it, and that's fine. But at least if you're trying it, you will allow me to be able to figure out where your issue is, and I can help you with that. So, all right. So if anything else, anything at all on anybody today? Questions? I know we're just introducing it, so sometimes you might take a while to go back and reread it, and then you might have some questions.
How often do you check your emails?
Oh, probably on the hour, every hour I'm checking it. Probably up till midnight every day, literally. Sometimes I'm responding. Like last night, I was responding to an email like at 11:30. So my point is, I'm very responsive. So I always check it.
Sorry, for the homework, is it supposed to be graded?
The homework
Yeah, is it supposed to be graded? Are we submitting the homework?
on Connect.
I'm asking for the homework you said we should do. Is it for grades?
Yes. Well, everything in Connect is graded. I mean, what specifically these problems I'm showing you right here are just practice. This is just the end of the chapter problems. So these are all in your e-text. Some of these are the same ones that I've assigned you, and my intent is to practice a lot of these with you in our sessions. But the ones I practice with you here are not graded. The only thing that's graded is whatever you submit through Connect. Does that help?
Okay, yeah. Yes.
Okay. Good question. Good question. All right. Anybody else? All right. Well, I am going to sign off here in a minute, but I will put another announcement today, and I'll put a couple exercises out there. But just as I'm talking with you, go to your end of the chapter problems in your e-text as well, and I'm going to go over some of these problems with you on Wednesday, and my template up, and then we'll take them one by one. I'm not rushing it. So as I go through them, even in our LVL session, just let me know if you're not getting it. Whatever you're not getting, you gotta let me know. I'll be happy to go back over for you. All right. Okay. Any final thoughts?
All right, I just emailed you.
Okay, cool. You just emailed me?
Yeah.
Okay, I got it.
All right.
Okay, I will go back to you in a minute when I log off. No problem. All right. Anybody else issues? I got 5 people left in there, 4 people left. Okay, Antoine, I'll respond to your email in a minute. If there's nothing else, again, this video will be up in a minute, probably within an hour, and then on Wednesday we'll continue to practice the rules of debits and credits. All right. Have a good day, everybody.